Hello, it's Tim Moffat here from Oakleigh Investment Management. I have Akil Patel with me today. He's a Director of Property Share Market Economics and a co-investment committee member. Just dialed in, about to get on a plane from Amsterdam, I believe. Now we're sitting here on the 6th of November in Australia, which is the day after voting day in the US. And we've been watching the votes be tallied up overnight, and it appears at this point that it's a sweep of red across the board, Senate and most of the swing states. So there's certainly a lot of emotion around on both sides coming into this, and still today, if you're watching your Twitter feed, it's pretty hot, red hot. And I know Akil and I have talked about this a lot, but I guess talked about the relevance of it all, and the real estate cycle. And I thought probably a really good time to ask Akil, I know his feelings on it is that it's all not actually all that relevant at all, and to ask the question why, given the timing.
Hi, Tim. How's it going? Greetings from Amsterdam Airport. So I've just opened the news this morning, and it does look very much like not only will Trump win the presidency, but also there'll be a clean sweep of the houses of Congress. So whatever he wants to do, he'll be able to do, I think, is basically the message. And so there's obviously a lot of consideration around what he might do, what he might not do, what institutions he might tear down, which kind of people, for example, Elon Musk, he might promote into his administration, etc. But I think really from an investment point of view, and particularly an investment point of view that's based on the 18.6 year cycle, which our portfolio is focused on, it's not really going to make all that much of a difference. Where we are in the cycle, pretty late stage, couple of years into the peak. Both candidates had talked about the things that you would expect to see: a lot of infrastructure spending, support for the property market. Trump famously is interested in lower interest rates. Let's see if that's a possibility. It's probably going to lead to somewhat higher levels of inflation than maybe we'd expected a few months ago. Again, that's kind of normal for this point in the cycle. But it will also mean a pretty strong couple of years in the stock markets, and stock markets that are exposed to the things that go up at this stage in the cycle, notably commodities, I think will have a very good couple of years. So it's all on track from that point of view.
Yeah, so from my point of view, it all looks like you said, on track. We're going to have a real estate guy coming into the house.
Yeah, it's interesting, isn't it?
Tax cuts, lower rates, plenty of government spending.
If the real estate cycle could take human shape with all its kind of excesses and bombast, and it would be Donald Trump. And he's a real estate guy, and he likes building very tall towers with his name on it. So yeah, it's going to be an interesting ride.
Yeah, absolutely. Well, tying it back to the portfolio and potentially the property share markets economics roadmap, which has been incredibly accurate year to date. I know we can't talk about the forecast into 24, 25, but you've been pretty public in saying end of second half of 24 is net up and potentially quite strongly, and pushing through into 2025. So I'm not sure if you've got anything more to say than that, but the portfolio, 18.6 strategic investment portfolio, has been fully invested at this point. We've had a pretty good quarter to date. We're up probably 3.5% on the MSCI and the Aussie market. So I'm certainly, given we're fully invested, certainly be intrigued whether your roadmap plays out accurately over the next couple of months, and then I guess into 2025.
Yeah, it's certainly been pretty good so far this year. There's a lot of different opinions about what markets would do, but it's quite useful to have sort of the grounding based on cycles. I think, what we've discussed in the committee has been kind of rotations into a broader range of kind of sectors than we had seen maybe in 2023 and first part of 2024, where it's really kind of what people were talking about was how concentrated the US market had been and how much it was just reliant on AI. And of that 7, main companies. Well, I think
Handful
we're
of
starting to
stocks,
see
yeah.
we've managed to keep our portfolio kind of on track, and we've taken advantage of some of the rotation of capital into a broader range of sectors over this year.
Yeah, you're definitely starting to see that. Like if you look at the S&P equal weight, has been a lot stronger of late. Inside the portfolio, the gold stocks have been very strong. Bank stocks have been very strong. Some select real estate, like realestate.com, the REA Group in Australia has been, I think, actually our best performer this quarter. So it's different. The rally or the strength has definitely been more broad-based, and that's been beneficial for our portfolio.
Yeah. Are you seeing other sectors come to the party, or you project some
Yeah,
others in the next
yeah.
few months? Yeah.
Well, I think we're watching the material space pretty closely. We do have some resources exposure in gold and a little bit of copper. I think I mentioned last time we would like to build the copper exposure a little bit, but to date it's been somewhat muted in terms of the copper price. So, I think I can certainly see a scenario where that heats up, and we don't really want to jump the gun on that. But I think if we start to see that turn up from here, we'll be looking to build bigger positions in that space.
Yeah, certainly our sort of watch list of potential opportunities, I think, contain exposure to those sectors. So yeah, it's looking good.
Definitely.
I mean, I think the broader market backdrop is probably there'll be a lot of noise, certainly the next few months. Things may
Yeah,
settle
definitely.
down in next year. I mean, I don't want to underplay the importance of a new US president from a geopolitical point of view. But the reality is, if you study your history and you kind of know how these things work, they end up contributing towards, the cycle going into overdrive. And I certainly think that Donald Trump is going to be, if he is indeed president, I think he's going to be, he's very much going to kind of support that process. And so, from a investment point of view, it's if you know what to look for, I think it will be a pretty good couple of years.
Beautiful. All right, let's wrap it up for there. And I guess we'll find out pretty shortly, or probably when this video is released, that it's a big swing to the right or to the red. But appreciate your time. Have a safe flight and talk soon.
Thank you.
Thanks, Akil.